Oil prices are heading for their biggest monthly gain in over a year, with demand rising as OPEC Plus maintains production cuts. Meanwhile, Saudi announced today that its economy saw a slowdown in Q2 on the back of its production cuts. And I'm joined by Wael Makarem, Senior Market Strategist at Exness. Thanks so much for joining us today. Now, West Texas has seen 5 straight weeks of gains, rallying 14% this month. This is oil's best July performance in 2 decades. What's causing this month's rally, Wael?
Thank you so much first for having me. There are a lot of reasons why oil prices are rebounding from June's low. So since the beginning of the year, we were trading in a range bound, almost between $65 and $90 a barrel, $85 a barrel. But recently, there is a bit more optimism in the markets, which pushed oil prices higher. We're talking about a rebound of around 20% since the bottom that we reached back in June. Among these reasons, if we kind of dissect them from each country, in the United States, for example, at the beginning of the year, there were a lot of expectations that the US could go into recession, especially due to tight policies by the Federal Reserve. However, the recent data showed that the US economy grew by 2.4% in the second quarter, which is amazing. When we go to China, also a little bit of optimism surrounding the recovery, despite of it being a little bit lower than expected, but all the plans for stimulus are also even supporting that. So we have a little bit of positivity surrounding the economic expectations, especially with interest rates coming near their tops. So investors are betting that if this is the top, then the worst is behind us and we could be avoiding a total economic collapse, which is good for oil demand.
Absolutely. And today, Saudi announced Q2 GDP growth of just 1.1%. That compares with 3.8% growth in Q1. Now, with these production cuts, is Saudi sacrificing its current growth for anticipated future gains from higher oil revenues?
Actually, we can't call it like that, since Saudi Arabia is doing a lot to support markets. Since for the past 2-3 years, we've been seeing the crucial role that Saudi Arabia is playing in OPEC to try to stabilize the market. It's fine we're seeing this price rebound. It's good for the kingdom, and I don't believe like there would be some sort of total negative impact, because if we're seeing a drop in production, so let's say we're dropping production by 15% from April's quotas, or even a little bit more, but prices are up 20% now. So there's a bit of let's call it a recovery in price when we're dropping a little bit of production. And also, if we look at the other initiatives taken by the kingdom to try to diversify the income, this is also a little bit supporting, especially with the recent data showing. So on the long run, this is going to be beneficial. On the current status, it's going to be a little bit pressury, let's call it that way, but definitely it's not that bad.
Hopefully will pay off in the long run. Now, we saw Goldman upwardly revise its global oil demand forecast, and they expect an extra 1 million BPD Saudi supply cut to last through September and to be potentially halved from October. Is this also your prediction?
Actually, this depends on where we see prices going in the coming weeks, since we're already up 20%, and also oil producers, they're not trying to push prices higher also to impact the global economy to the downside, because as we know, when oil prices go higher, this is going to be reflected again on inflation figures, and this is going to lead to more tightness, and this is also going to lead to a little bit of more risks on the economy. So I don't think the kingdom is going to take such a step to extend towards September, especially if we see prices ranging between $80 to $85 in the next week. If we see prices going back below 75, yes, I believe this could be an extended action to be taken.
Well, speaking of prices, Goldman's 12-month forecast for Brent is $93. Do you think $93 is reachable over the next 12 months? What's your price forecast?
Actually, I still expect oil prices to remain range-bound towards the end of the year between $65 and $85 a barrel, unless we see something very optimistic when it comes to the economic outlook, and then this is where we can be reaching $90.
Great. Wael Makarem, Senior Market Strategist at Exness. Thanks so much for joining us.